Good evening everyone and welcome to session recap 28th of March 2016. My name is Nenad and we will see 5 different setups. As you can see, last week was volatile. We had some good trades, but at the end of the week we had low volatility because of Easter, and nevertheless our euro dollar trade that I posted on Friday is like 55, 60 pips in profit. So you probably, if you went long on POC on euro dollar, you can see that we are in profit now. So as always, before I begin, our standard risk disclaimer. Online educational materials are available at Bear Markets Estonia for a global audience. So take into consideration that information is not suitable for everyone. If you want to get a corresponding information, you should visit Admiral Markets Global, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion, and have in mind that Forex is risky business, so this should not be taken as advice. It's a personal opinion only. So this webinar is for informational and educational purposes only. Hi Chris and hi everyone. So we can proceed. You can download Admiral Markets Supreme Edition. A lot of emails came to my address asking for help to download Trader's Room and, download Correlation Table. As you know, Correlation Table is a part of Admiral Markets Supreme Edition, and you can download it by logging into Trader's Room. Of course, if your PC is not good enough to trade currency pairs because maybe it's too slow or it's bugging or freezing, you can do that from our web platform that is located at this address. And still, Admiral Markets is officially best MT4 broker voted in 2015. Risk disclaimer concerning all our trades and setups that we do each Monday. So all session recap trades and analysis is done with Camarilla MACD. You need to give price a breathing room. You enter within 5 to 15 pips of the predicted level if it's in agreement with your system. Use scaling in. Okay, this is also an advice. If you have the possibility to use scaling in, you can use it. Respect your stop loss. So if you make any entry, you definitely should respect your stop loss, because stop loss is what ultimately will have an impact on your overall risk. Before you even consider making a trade, you need to calculate your stop loss, and according to your stop loss and risk, you need to place your position. Add a spread to your stop loss. So if you're trading from ECN account where spreads are very low, like 0.3 to 1 pip, add at least 3 to 4 points to your stop loss. We take only one position, so we have 5 different setups, and there can be 5 different positions, but we only take either alternative or position trade. First touches of the zones are most profitable ones, so we trade the first rejection, first entry into the zone. Position trades are trend trades. Alternative trades are counter trend trades. Breakout trades and scalp trades are done independently. Those are usually second entry. Depending on time and volatility, usage of trailing stop is highly recommended. We don't recommend using trailing stop if we have less than 20 pips. So the minimum number of pips we should make is 20. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Scalp trades should be done at or very close to important support resistance levels. All trade level zones and setups are calculated by historic levels in Camarilla. You can add these levels to your system. Pay attention to my Twitter updates, and the term pips pool is the maximum available number of pips you could have got on recap entries. These are previous week results. As you can see, there was like 90 to 180 pips on the table. I hope that you made at least 10, 20, 30% out of maximum pips pool. Euro dollar was good for 30 pips. Pound dollar was good for either 10 or 55. I personally closed my trade after 10 pips as I have advised. As you remember, I advised it on Twitter, but some people told me they made 50 pips. Maximum was 55. Australian dollar was good for 50 pips. Dollar CAD didn't qualify, but the trade went in our direction. New Zealand dollar didn't qualify, but it was only 5 pips short from our POC zone, as we could have made at least 50 pips, so it was very, very close to POC zone. Only 5 pips short from it. So basically it's either 90 or 180 pips. Again, a positive week, and we didn't have any losing trades. This was euro dollar trade from last week. This was our setup. As you can see it here, we got our buy trade was initiated. Here it was initiated to the pip, and the price came to 1260, and then it started to reject. So we had a good positional buy trade. Pound dollar trade initially was also good, but you see there was a huge drop prior to our entry, and what happened then is, you see there was a huge drop, and probably a lot of people thought, and traders thought, okay, this will go down. But that is the power of POC zones. That is the power of price action, guys. The price came to 42.50, 54. Then it rejected towards 43.10. So basically, we could have made like 50, 60 pips. I said, okay, it's time maybe for you to protect your profit, because look at this, guys. This was really... So the only way to stop this falling knife, as I say and traders usually say, was to actually place a shield of POC zone, point of confluence shield. This was a shield that rejected a falling knife towards 43.10. So the initial entry within the POC zone was huge success, as you can see. Okay, so very good rejection. Not the perfect, because there was a huge momentum to the downside. But guys, if you wanted to make pips, this was the time to make pips on long trades. Because all the way up from here and even here, there was no such good opportunities as from POC zones. So you can see how POC zones actually are also valid during counter trend movement. Australian dollar, again, price was here, went to POC zone after the webinar, and then it went to touch 76.20, and after that it got rejected. So the first entry within the zone was successful, and you could have made 50 pips, even more, by trading it. So this was the trade of the week. The price came here to the pip, and then bang, shoot it up to the upside. Dollar CAD, again, another good setup, but our entry hasn't been touched. I was aiming for 30, 15, but the price came to 30.27 and it rejected. So if it had the price a bit more to the downside, we would have made a huge chunk of pips on this trade. But as I always say, guys, sometimes if you miss a trade, but you can easily and clearly see where the price is going and that the price will respect my analysis, then you should go for it. Even though it was a bit higher, it was very clear that the price will proceed to go to the upside. Ilya, I wish you a happy Easter. Same to you, Ilya. And for all people who are celebrating and who have been celebrating Easter, I wish you the same, guys. And I hope that you had a good time with your families. And yeah, so okay, so you can see here, thank you guys for good wishes, I appreciate it. So dollar CAD, as you can see from this spot, it rejected. Well, sometimes it will happen. You see, we aim for 30.15, but the price came to 30.27. But maybe your system told you to go long here, and then you saw my analysis and you said, well, if Tarantula was going long, I will try to go long too, and maybe you could have made some good pips here. Guys, this was potentially 300 pip trade. Look at this. The price hit my target, so the only thing is it was short 12 pip from the entry, because our zone is 15 pips buffer, right? And this is the level, so it's 30.15. Ah, well, it will happen sometimes, but because of that, you should always watch additional potential signals on your own method strategy system and maybe enter around this level here. Same for New Zealand dollar, but actually on New Zealand dollar it was a little bit different story. The price came 5 pips close to our entry spot. 67.00 to 67.15 was our entry. Well, it came to 67.20. And I think some people asked me, should I go long? I said yes, but scale in. So instead of risking whole position, divide your position, try at 67.20, and if the price goes down a bit, try to add some more, keeping stop loss the same. What happened is, see, the price came here, bang, so either no trade or 50 pips, because it was really very close to POC. Now some people would probably say, okay, but how do we know that we should enter the trade? Guys, if the entry was at 67.00 to 67.15 and the price came here, well, drop to lower time frame, watch what happens on lower time frames, 1 minute, 5 minutes, and maybe you can add a position. So instead of, let's say, risking 0.5 lots, you can open 0.20, and if the price gets a bit in the zone, then you can add 0.3 more. But your stop loss should be the same. You don't move your stop loss. So that was it. 180 or 90 pips, whatever, it was a good week for us. Ilya setups. Dollar CAD signals inverse of WTI, yes. CAD up, oil up. CAD down, oil down. Of course, if oil is going up, dollar CAD will go down. If oil is going down, dollar CAD will go up. Inverse indeed. Yes, Ilya. Ilya is right. Ilya says MT4 has a very comfortable alarm function. I recommend to everybody here. And he's saying this means 10 to 15 pips above your setup, set an alarm. Very, very, very good comment, Ilya. And yes, try to do that, guys. So once you see that your alarm is making noise, drop to your chart to see where the price is, and you can enter the position or just place a small entry if it's above POC, 5 pips above POC zone. Yes, it's very hard to monitor 24/7. Of course, I know that. But the rule of thumb for price action trading is definitely the first touches of the zones are most profitable one. Because guys, look, this is the first touch of the zone. I mean 5 pips from it. Or let's see this. So this was the first touch of the zone. Because you know what price action is. There are a lot of people who actually think they understand the price, but unfortunately they still cannot comprehend the price even after 5-6 years of trading, even more. Forex price action has been and will be always repeating itself. That means if the price was historically rejected from one spot, it tends to do in now moment and in the future. The problem is traders are just looking at now moment, and a lot of traders who actually tried price action simply don't want to watch historical price action. Well, guys, this is near-term history here. And what happened in the near-term history? Price was rejected. Remember guys, most of the time price is ranging, and this is the range. So why not compare historical buyers or sellers with now moment buyers and sellers? Even if the price will be ranging, it should be rejected if there is enough confluence. So by watching historical price action, you can align now moment buyers or sellers. And that is the beauty of Forex trading. It's different in stock markets. Really different in stock markets. Because the indices in stocks, guys, don't use traditional levels of support and resistance. Indices are a group of stocks, and even stock trading, it's different to Forex market because a single news or rumor can make your life either miserable or happy. So too much of a risk. And you need really more money to trade it. In Forex market, you're good even with $100. You still are able to make some profits. But if you're able to make 1,000 or 10,000 out of 100, well, that's an achievement. So that was it, guys. And now let's see what we have for this week. Market plan euro dollar. Same thing. 1.1150 buy, stop loss, target or breakout to the downside. Basically, euro dollar follows the same analysis I did on Friday. So if you are in profit, guys, that's good because you're at the correct side of the market. I hope that you all read my analysis, and I hope that you all know what I was thinking about. I had some feeling, and my feeling maybe was right. On Friday, I thought I was the only one who goes long. No, Ilya, the only setup for euro dollar is long. And the same reasons from Monday analysis are applied today. We can easily see that euro dollar is trying to go up, rejecting from the strong PLC zone. So read my analysis and everything will be said to you. So yes, 95% thought it would go down, but definitely euro dollar was a good trade from Friday, and I hope that you made some pips. Because guys, even now at this moment, our trade is like 55, 59 pips in profit. Pound dollar 41.10. Yeah, okay, I will show euro dollar. Give me a second just to open my chart. Just a second. Okay, very clear here. See? Sorin, yes, it will be still valid because tomorrow London traders will join. So what they can do is they can lower the price just to buy it lower again. So here you can see euro dollar rejections from EMA 89. See how the price is going. Now guys, do you see any patterns here? I'm waiting for your answers. Do you see any bullish patterns here on this chart? I will wait for you, yes. Marco, you are right. Marco is totally right. Ascending scallop indeed. This is, guys, ascending scallop, you see, like J letter, and it will try to go up. This here is inverted head and shoulders. Look at this here. Inverted head and shoulders. You can even place your trend line like this. See? And look at this. The price rejected from EMA just above this line. So inverted head and shoulders here. I don't see any pennant here. Ah, well, you mean this one, yeah. There is one indeed. I thought I saw that you, but this, you see, it's not a typical pennant. Sorry. Yeah, it's not a typical. This looks more like a broadening top. See, like a broadening top. It's too broadening. Pennant would look like this. Parallel lines. Megaphone, yes. See? You know why megaphone is formed? Because megaphone is actually when price is making higher highs and lower lows. In this example, it's ascending, so it's not like this from this perspective, because if it's horizontal, then it's a typical megaphone. This looks like a vertical, but it looks bullish because the angle of this megaphone is, look, it's to the upside. So when you see a megaphone like this, it's a ranging megaphone. When you see it like this, it looks ascending. Here, this is scallop. See? Scallop. So yes, Apostolos, first I would like to see if it breaks 1270. I would like to see it here around 1340. But if it breaks this level and closes above this level, we have possibility to go to 115. Yes, you're right. I also said it on my analysis on Friday. Now pound dollar, see it's in uptrend. Because of that we have a buy position, 41.10, 40.10 stop loss, 43 is target. Or sell at 45.50, 45.90 stop loss, 44. I want to sell it higher and buy it lower. So this is it. The price is ranging now, but at the same time it's supported by ascending trend line. So pay attention to this. $41.10 buy position, sell position 45.50. So 41.10 buy position. See here? See how many rejections are, guys, there is. I always say power of historical versus now moment buyers and sellers. In this case, it was buyers. So the price in the past has been rejecting from this zone. Look how many rejections. 4-hour candle, guys. This is not 1 minute. Look at this. 15 pip buffer, look. So let's see. If it goes here, I guess there will be now moment buyers. If it goes below 41.10, well, then we can expect maybe a retracement over here. Definitely, I would look to sell here a little bit more, sorry. See how many rejections. And pay attention to this setup. No, it's not risky. Well, yeah, maybe. 43.60, it's not risky for the scalp, Apostolos. Apostolos is asking, would you consider selling at 43.60 risky? No, if you want to make a scalp or let's say scalp to intraday, so it could be achieved. But if the momentum is strong and is trying to break H4, if 4-hour candle closes above H4, then it should go up. But for scalp trades, Apostolos, this could be a good level, yes. For scalp opportunities. Australian dollar is in uptrend, but there we can see a possible head and shoulders over there. Buy position is 74.10, 73.80 stop loss, 75 is target. Sell position is 75.70, 76 stop loss, 74.80 the target. Australian dollar, look at this, guys. Huge uptrend, but look at this. This could be standard head and shoulders. Look. This is also a form of M bearish. Look. And it could be a possible head and shoulders here. So this is what I see on Australian dollar. Buy at 74.10, sell at 70.50.70. 290, of course. And this is historically zone for buying. Because if the price gets here, it can be a good spot to buy it. Eli is saying shoulders has two heads. No, exactly, this is head. Head has two heads. Double head, yes. Alexa, Australian dollar got 75.56. Well, also here, 75.70 to 90. Now, dollar CAD, 31.10, 30.70, 33.00. Dollar CAD. It's a downtrend, guys, but you know that every trend has its own retracement, and also there is an end of a trend. You cannot always expect the trend will continue. Because of that, here we see a break of EMA 89 and the close. So I assume it can be sold and it can be bought like this. 31.10 is buy, 30.70 is stop loss, and 33.00 is target. Sell position is 33.00, 33.30 is stop loss, 31.10 is a target. See here, here also. So pay attention. I could get this bit lower to L4 like this. See? And also pay attention to this region here. Well, the small stop is because look at this. L4 that is hard to break is 31.08. If it breaks, you still have, I mean, the best is if the price touches the zone, then we go long. But if price goes below it, it should be 40 pips until, yeah, this is it. Sorry guys, this is a mistake. Thank you, Mario. 30.70. I will correct it now. So 3070 is stop loss. That is what I had in mind. I will correct it now. So 3070. Okay, that is stop loss. Wait just a second. Yes, it's good. But yeah, sorry, but guys, this is target price. 3300 is target price. No. 33. No. This is correct. I will show you now. Just wait a second. It's correct, but I thought that I had a small stop for this. No, it's not small. It's 40 pips. It's enough. Okay, like this. So 40 pips stop loss. Yes. Yes, it was correct. Ilya, yes, this is correct. 3110 long, 3070 stop loss, 3300 target. Okay, so it is clear, guys. I think it is. So this is dollar CAD setup, and sell is 3300. Look at this. Look these two parts here. Look here and look at here. $33.00 is here. Look, rejection, false breakout, breakout again, and look how it follows. So this is where historical rejections have taken place. 33.00 to 33.15, of course, and stop loss is 33.30. Only 30 pips stop loss. Yes, Mario, you're right. 40 and 30 pips stop loss respectively. Yeah. So you're correct indeed. Okay, what else, guys? Euro GBP. Well, look at possible T89 on 4 hour. I say possible because here, you will find it here. Euro GBP. If this closes like a hammer, it will be T89. So this can be T89, rejection of our POC zone. So if this closes bullish, we possibly could see a bullish price action on Euro GBP. See? But we also have a sell position at 79.30. So 78.40 buy position. Stop loss is 78. I will correct this. So 40 pip stop loss. Another typo. Well, I will correct it now. So 78. Okay, let me correct it. 78.00. Okay, here. And I will swap the screen. Okay, like this. Euro GBP. Okay, it's 0. Well, sometimes I use slides and then it just stays from New Zealand from previous week 1 and I leave it as 1. But yes, it's 0. Let me correct this. 0. Well, you know what I mean. Of course, you don't want to wait 1,000 pips for the price because it won't happen. So yes, it's 0. Indeed. Okay, like this. And here we are. Let's see. Think it's good now. Euro GBP, yeah. 0.7840 buy entry, 0.7800 stop loss, 0.7935 target price. Sell is 0.7930, stop loss 0.7960, and 0.7840 is our target. And watch for possible T89, guys. Watch for it. This is not T89, but if it closes like a hammer, it will be T89. So watch for this. Watch for possible T89. Okay. It needs to close like a hammer, and then we will see. Okay, so this is it. Now, guys, if you have any further questions, please don't hesitate to ask me. There should be some volatility during the Asian session and during next day, especially London, because London traders are already positioned and we expect a breakout. Yes, I will go through slides. And I will go dollar yen, dollar Swissy, yeah, I will show. So first slides, euro dollar, pound dollar, Australian dollar, dollar CAD, euro GBP, and that's it. Now, okay, questions. First, dollar Swissy. I cannot give you the exact POC because I need to do a full assessment of the analysis. I can just give you a quick look at dollar Swissy, but unfortunately I cannot do a full analysis. Just from 1 hour, 4 hour perspective, because 4 hour is bearish. This is POC here. Here, this is POC. Yes, 97.85 to 98.00. Yes, that's it. And the target first will be 97. This would be the second target, 96.40. Only if it breaks 96.40, it can go to 96. So this is POC from this part here. Dollar yen. Ranging price action on yen pairs, and dollar yen is not anything better. So this is ranging price action, guys. Watch for this. Watch for this. This is the zone for selling. And this is the zone for buying, because the price is ranging. So what I would do if I am to sell dollar yen, I would look for 114.30 to 60 to sell. And if I wanted to buy it, I would go for this zone here. So definitely dollar yen is ranging. It doesn't have any strong trend, because yes, on 4 hour you see it's bullish, but you see how the price is making small candles. Usually in retracement, candles are small, but look at it, these are strong candles. much stronger than these bullish candles. So yes, it is technically bullish, but yet again, bearish trend was a bit stronger here. So this is ranging. Buy from here, sell from here. Gold, Euro CAD, GBP CAD. Let's see gold first. On daily, it looks like it might start a bullish move again. It might. 4 hour is bearish here. It's bearish. 1 hour is bearish. So I would probably look to sell. Intraday sell around this region here. Even here. Because this candle is not that strong. It should be a hammer, but it's not. If it closes bearish, then yes, gold can go down. But guys, I wouldn't trade gold now. Look, it's very close to this support here. Very, very close. So this looks like it might go up from here. Look, it could go up from here. Although it is bearish at this time, look. It's close to support. And look, now this candle is bullish. We need to see the daily close for this. It's hard to tell. Yes, the dollar Swissy is completely inverse of euro dollar. So if someone doesn't want to trade euro dollar, I don't see the point in trading dollar Swissy. But yes, maybe some people prefer dollar Swissy more. But yes, if euro dollar is going up, dollar Swissy will go down, that's for sure. Adam is asking for slides. Yes, again at the end, I will do that. I will repeat the slides. GBP Swissy, okay. Let me find it first. Where was I think I put it up here, but I cannot find it. Give me just a moment to see if I can find it. Okay. It should be here. I'm not sure why I can't see it. Okay, not here. Strange. Let's see. Symbols, Forex. Yeah, here it is, GBP Swissy, but hard to see it here. I will go through this again. GBP Swissy. Okay, let's wait. GBP AUD, Singapore dollar. Yeah, it says it's on Market Watch, but I cannot see it on Market Watch. Very strange. You see, I cannot see it here. But it says it's on Market Watch, so. Well, I don't see it, so we need to skip it. We need to skip it at this point because Market Watch, for some reason doesn't show it up, but it should. It's only CAD Swissy. I don't see pound Swissy. So Carlos, if you have other pair, just tell me. See, it says it's showing up, but it doesn't show up here. GBP CAD, before that, SP 500, bullish but ranging. Look at this. Master candle here, guys. This is master candle. 4 hour time frame, very clear. Above H3 bullish, below L3 is bearish. So it looks like it. Below this bearish, above this bullish. GBP CAD, yeah. Bullish, bearish. Yes, sorry, SP 500. Bullish, bearish. But it looks more bullish to me because of this candle here. Still, I would like to see 4-hour candle close above this level, and that could spike up the price. GBP CAD. Here it is, GBP CAD, 4-hour candle. Okay, this could be T89. Ilya is saying Admiral Markets improved trading with SP 500. Thank you. Thanks for comments. I'm glad you like it. You like it? Okay. So, yes, thank you for your comments. I will snapshot this and I will send it. Okay. So thank you. Pay attention to possible rejection here. If this closes like this would mean T89 from POC zone. So this could be a good trade to go short. So pay attention. This could be a potentially good trade to go short. Yes. Here. Pay attention to it. One more question. Yeah, PIP value dollar. Excellent, Ilya. I will tell them. Euro yen. Chris is asking which time frame do you use T89? Yes, 1 hour and 4 hour most of the time. And if I see it on daily, I use it for direction. Possible direction. And as a confluence point, 1 and 4 hour, yes. Euro yen. It's not close to buy entry. Definitely it's not close to buy entry. Buy entry could happen around this spot here. Swing up, swing down. Yes, this spot could be good for longs. This one here, this zone. So it's not close. And slides once more. So let's see the slides once more. Euro dollar. Pound dollar. Australian dollar. Dollar CAD. And Euro GBP. Carlos saying thanks, Nenad, you're the best. Thank you, Carlos. Thank you for your comment. And the last question is, Alif is asking for ODN short analysis. He has short position, so yes. The thing is, it's bullish, technically, Alif. But it might show a retracement to the downside. Technically, it is bullish. You see, this is bullish. But it shows a possible retracement. So this is the spot I would go long. At this point, your short can be good. See? This can be a good spot to go long. But at this point, it looks like it's going here. But it needs to break this spot to actually proceed down. It's low momentum. So pay attention. It could be bought, but also this could be going down. You don't see, sorry guys, sorry, here. Here. You see, this is bullish. Look at this. But look at this is also 4 hour. It's very close to resistance. But it is bullish. 1 hour, it is rejecting from this region. So if it goes down, technically it could go. But I would go long here. Or here even, look at this. Also a POC zone. Look, another POC zone here. 85.20. It could go long. But if it doesn't proceed here, it means that the uptrend is very strong, and that on daily chart, this this is bullish W. So it can go even higher on bullish setup. So pay attention to it. Okay guys, I hope it helped. Let's see what we will have this week. I wish you a very good week. There will be volatility ahead, especially on London Open probably. I think so, because now London traders have been waiting for a couple of days to enter the action. So there will be some action, and an Asia session. So as always guys, cheers, and enjoy my new blog about women traders. Cheers and trade safe.